Breakouts can be one of the most exciting trades you take, especially when you hit that button and your position goes into the green right away. And what better way to know that you nailed the breakout than to see your account in the green? But hey, there's always the possibility of the market reversing after you entered. And before you know it, your small paper profit turns into a losing position and you got caught in a fake breakout. Now, is this avoidable, or is this just part and parcel of trading? Well, I would say you can somewhat reduce the occurrence of being caught in a false breakout, but you can't eliminate it entirely. After all, there's no such thing as 100% win rate in trading. So, wouldn't it be great if you had some form of checklist, a checklist that you can refer to, which will drastically increase your odds of nailing the perfect breakout entry? Well, I have that prepared for you in today's video because I'm going to show you how to nail the perfect breakout entry and improve any breakout trading strategies with 5 critical factors you need to watch out for. This will allow you to focus on the highest probability breakout trades while avoiding the ones that are likely to fail. Now, this isn't a breakout trading strategy video per se, but I've previously uploaded other videos guiding you step by step on how to trade breakouts. So if you are looking for a strategy video, then I'll leave a link to those videos at the top right and at the end screen of this video. Now, this video will assume you have a good breakout strategy and teach you how to tweak it further to improve your win rate. So be sure to watch it till the end. Now, if you stick till the end, I will also throw in a bonus tip to increase your win rate and help you identify breakouts that will explode massively, not just your typical regular breakouts which makes you a couple of pips. Sounds good? I hope so, because a lot of work goes into creating such videos. So please smash that thumbs up button, subscribe to the channel and hit that notification bell. It helps support this channel so that we can keep creating valuable trading videos such as this. Now, we also do a giveaway for our plug and play package worth $37, and if you wish to participate in our giveaway, look for an emoji somewhere in this video. You can also find the full instructions in the pinned comment down below. So let's dive into the first critical factor that you should focus on for higher probability trades. When you trade in the direction of the main trend, you drastically increase your trade's probability of working out. As simple as this sounds, many traders ignore it and try to pick market tops and bottoms. And if you are new to this channel, I always stress that beginners who are struggling should focus on capturing the low-hanging fruits first. Trade with the trend until you are profitable before considering trading reverses. So, look at the chart over here. Do you want to buy or sell pound dollar? Well, if you answered buy as you should, then you have understood this concept. So let's move on to the second critical factor, looking for buying or selling pressure. This is one of my favorite things to watch out for, and I have covered this concept multiple times in this channel. Why? Well, because this concept allows you to identify high probability breakout setups, nail the perfect breakout entry, and best of all, go in with a very tight stop loss, which also means you can trade a bigger position and make more money. Sounds good? Then pay close attention and keep watching. When you are looking for buying pressure, you want to see a series of higher lows as price attack the resistance level. This signals that the buyers are chasing after the market and anticipating a breakout. I mean, think of it. Why would buyers buy into resistance unless they expect the resistance to break? Here's another example of what I mean. Over at this chart, you can see that the lows are getting higher. If you are familiar with chart patterns, this is actually an ascending triangle. Look what happens afterwards. A very nice clean breakout. Now, the opposite is true for selling pressure. You want to see a series of lower highs as price attack this support level. So what this means is that sellers are selling at a worse price each time. The advantage of watching for buying or selling pressure is that you can use a tighter stop loss. So rather than setting your stop loss at the furthest swing point, you can set your stop loss above or below the recent swing high as the market attacks the key level. Here's an example of what I mean. You can see that the stop loss is way smaller, and if price were to explode in your predicted direction, you will catch a big juicy reward to risk trade. Moving on to the next critical factor, this one is huge because many traders don't consider this particular factor and end up buying into resistance or selling into support. This critical factor is identifying support and resistance as a zone. So support and resistance are never a single line. Many retail traders like to draw their support and resistance line as a single line, something like this. And there's nothing wrong because I get it, you don't want to clutter your charts, but you have to be mindful that support and resistance are always a zone. So when trading breakouts, you want price to have cleared the entire zone of support or resistance before taking the trade. Think of it like driving to a place. Do you think you will reach your destination faster if there was more traffic or less traffic? Well, of course, you will reach your destination faster with little traffic. So this is the same with trading. If you wait for the price to clear or overhead support or resistance, then the price can easily move in your favor. You will feel the excitement of catching a trade that explodes in your direction right away, which is what I mentioned at the start of this video. So let me show you what I mean on the charts. Here, we can see that price has broken above the resistance, but bears came in at the higher resistance level shortly after. So if you had just drawn in a single resistance level and traded the breakout, you would have been caught in a false breakout and lost money. More importantly, this loss could have been avoided if you understood the concept that support and resistance are never a single level and instead waited for the entire zone to be broken. Here's another example. This time, we see that price has broken the support line here. But watch what happens as price hits the other support line further down. Again, traders who traded the breakout of the first support would have been caught in a fake breakout, one that could have been avoided. Now, I want to show you a contrast and what happens if the entire support and resistance zone is broken. Here, we see that once dollar SGD broke the support zone, there was nothing to stop the price from falling. This is the kind of setup that you should be looking for. So please remember and take this concept to heart. If need be, you can also draw your support and resistance zones using the rectangular tool, which will look something like this. Now let's move on to the next critical factor to watch out for, a valid entry. This is the easiest thing to watch out for, but nonetheless worth mentioning because I don't want you to be entering and anticipating the breakout before it happens. A valid entry can be as simple as buying the breakout above the high or selling the breakout below the lows. If you don't want to be glued to the screen and watch for the breakout in real time, you can set in a stop order that automatically triggers when price trades at that level. Here's a quick example of what I mean. You can simply set in a buy stop order above the high over here. And do remember to input your stop loss. And finally, we have the last critical factor, which is a good trade management plan. Well, technically, this doesn't have to do with nailing the perfect entry. But hey, if you mismanage your trade and do not lock in your profits, you may see your paper profits turning into losses and eventually closing the trade off with a loss. A perfect entry means nothing if you don't lock your profits before price starts reversing. This is just as important as the other factors, so pay close attention and keep watching. A good trade management plan consists of two things. what you will do when you are right and what you will do when you are wrong. You want to be crystal clear on this even before you enter the trade. So what do you do when you're right? What happens if the market moves in your favor? Do you ride the trend for all it's worth and wait for the market to tell you when to get out? Or do you use a trailing stop loss like a moving average, chandelier exit, or the true range indicator to trail your positions? Or how about a fixed profit target of 100 pips? Well, there's no correct answer, but you do have to get clear on how you will manage the trade. Before you enter the trade, that's when you are thinking the clearest, because you have no emotional attachment to the trade. So do not make the mistake of figuring out what to do with the trade only after taking the trade. Moving on, you also need to have an idea of what you will do if the trade turns sour and doesn't go according to plan. This has to do with inputting a stop loss. You have to ask yourself, at which point will you get out if the market turns against you? As a general rule of thumb, your stop loss should be at a level where it would invalidate your trading setup if price reached. So suppose you bought a bullish breakout as per the second critical factor. Then your stop loss should go below the low of the recent swing low just before the price breaks the resistance. This is the logical answer because if the swing low is broken, that would mean that both the resistance and the recent price action are invalid. So it's time to get out. So here's a quick summary of the 5 critical factors to look out for if you want to nail the perfect breakout trade. Number 1, trade breakouts in the direction of the main trend. Number 2, look for buying or selling pressure. Number 3, identifying support and resistance as a zone, not as a single level. And number 4, a valid entry. And lastly, number 5, a good trade management plan. Now, because you stick to the end, I want to throw in another bonus tip to help you nail the breakout and catch trades that move massively after the breakout. And this tip is to focus on the duration of the range before price breaks out. The longer price ranges or consolidates, the bigger the breakout when it breaks. Think of it like a spring. The more compressed it is, the bigger it springs out. Well, the market functions in the same way. Here's the exact explanation for this. So what happens in a range is that it attracts buyers to buy at support and sellers to sell at resistance. And naturally, buyers will place their stop loss just below support and sellers will place their stop loss just above resistance. Now, the longer price ranges, the more players come into the market and thus more stop orders are accumulated above resistance and below support. Thus, when price eventually breaks out, it will trigger the stop losses. And stop losses are essentially stop orders which further fuels the breakout. So suppose a seller sells at this level and places a stop loss above. This stop loss order is actually a buy order to exit out of his short if he is wrong. This stop loss order, when triggered, further fuels the movement of price upwards. So this is why the longer the market is in a range, the bigger the movement once it breaks. Thus, if you are on the wrong side of the market, please do not hold your losses or try to average in. Exit and cut your loss fast, and if you can, go the opposite direction. And that's all I have for you in this video. Do leave a comment and let me know if this is useful and any other content you'd like me to cover. I'd love to hear from you. As promised, I will leave a link to the breakout trading videos that I've mentioned at the start of this video. If you do not yet have a profitable breakout strategy, please do check out these videos because you will get so much value in these videos. Thanks for watching and make sure to subscribe. I'll see you in the next one.